All right, we continue our focus on college and money and student loans and the FAFSA forms. Betsy Mayotte and Kathy Mueller are joining us now. All right, Kathy, what happens if a parent is just not willing to put in the information?
So there are options for the student. If the parent is not willing, and that is a choice, or in some cases too, the student doesn't want to contact the parent, and that again is sometimes the student's choice. The student can still go ahead and complete the FAFSA. If they are considered a dependent student, again, primarily under the age of 24, they can still fill out the FAFSA and be eligible for student loans. They won't be considered for any need-based federal aid, but at least they'll have that option of getting student loans if they want that to continue their education.
All right, Betsy, this person says, what happens if you don't complete any repayment paperwork? Does it go on your credit score?
So failure to fill out your paperwork doesn't go on your credit score. But if you fail to make a payment because you can't afford the payment because you didn't submit your lower payment paperwork, then that could affect your credit rating. They're going to start reporting 90-day delinquencies again starting this fall.
Okay, so that has not happened up until now. It was on pause.
Right, they stopped during COVID. It's called the on-ramp period to sort of let things shake out from the long pause. But that on-ramp period is over this fall. So it's really important that people, if they need a lower payment, to get that paperwork in, because that can take a couple months to process.
Okay. Kathy, this person says, if I'm the only parent and I owe my own student loans, will that affect my daughter going to college?
No, it will not. The student's financial aid is separate from the parent's financial aid, so I encourage that student to go ahead and complete the FAFSA and the parent to contribute information to that student's FAFSA as well. And again, those are two separate issues. The parent's financial aid is not mixed with the student's financial aid.
Okay. Betsy, this person says, what happens if the school that I was attending became unaccredited and I was never able to secure a job in the field that I received a diploma? Do I still have to pay back that student loan?
Unfortunately, the answer to that question is yes. So it actually states explicitly in the promissory note, not being able to find a job in your field is not a defense to paying your loans. And as far as the school losing its accreditation, you would have been able to transfer to another school, perhaps. The only way you would potentially get forgiveness in that scenario is if the school fraudulently didn't tell people that they'd lost their accreditation, and were still advertising that they were accredited. In that case, there might be a possibility of loan forgiveness. But otherwise, unfortunately, you are still due for those loans.
All right, Kathy, with all the FAFSA mess that we had this year, if someone is still waiting to find out how much they're getting, what should they do?
Well, that's a good question. So the first thing I would recommend that they do is check their account at studentaid.gov and make sure that they have a FAFSA submission summary and a student aid index. If they do, that means their FAFSA has been processed. If they still don't have a financial aid offer from the school, and they should remember that a lot of things have been delayed, so hopefully everybody has their financial aid offer by now, but if they don't, they should contact the school financial aid office and make sure the school has their information and are preparing a financial aid offer for the student.
Okay. Betsy, this person says, why is it important to add your spouse to a repayment paperwork?
Because it's required. For borrowers that are married and file their taxes jointly, they are required to provide the spouse's income unless there's an extreme case of, say, domestic abuse, because the spouse's income is part of the calculation for that payment plan. But also, if the spouse has student loans of their own, they will actually combine the payments and the payment amounts, which could result in a lower payment for the household together.
Of course, if that spouse doesn't have a student loan and they just make more money, that just means that your income goes up, which means your student loan payment will go up.
That's right. But in that case, they can file their taxes separately, which will have tax implications, but the financial end of it may work out to a much lower student loan payment. So you have to weigh those two things.
Gotcha. Okay. Well, thank you both for sharing your time and your expertise on these very complicated scenarios and situations. If you missed any of this, this is going to be in the Two Wants to Know website.